What's up, MetaVerse update crew? Get ready for a wild ride because we're diving headfirst into the most explosive crypto news shaking up the digital world. First up, Congress is scrambling as a massive loophole in the Genius Act threatens to destabilize the entire crypto market. Could this be another bailout waiting to happen? Then, we're talking about a powerhouse event with legal eagle Emma Channing and digital asset guru Amanda Wick, dissecting the future of finance. Next, buckle up because Bitcoin is still on a tear, hitting mind-blowing highs while altcoins are exploding. What's fueling this rocket ship? And finally, a chilling new report reveals crypto crime is reaching epic proportions, with billions stolen and a new wave of terrifying physical threats targeting industry leaders. You do not want to miss this. Hit that subscribe button, ring the notification bell, and let's get into it. Genius Act loophole could trigger financial crisis. Congress thought they'd struck gold with the Guiding and Establishing National Innovation for U.S. Stablecoins Act, or the Genius Act, creating a neat trade-off. Stablecoins get regulatory exemptions, but they can't offer interest. The idea was simple: prevent the kind of risky behavior that can destabilize markets. But guess what? The crypto world, always one step ahead, has already found a way around it, cleverly rebranding interest as rewards. This isn't just semantics. It's a potential gateway to massive losses for everyday investors and a possible financial crisis down the line. Think about it. Bitcoin started as a currency dream but quickly morphed into a speculative asset. Stable coins, pegged to the dollar, were supposed to fix the volatility problem for payments. However, the reality is that most stablecoins are used for trading other cryptocurrencies, not for buying your morning coffee. While many Americans own crypto, very few use it for everyday purchases. So, why are people holding onto stablecoins if not for payments? For many, it's the allure of earning interest, or as they're now calling it, rewards. Major players like Coinbase are openly advertising up to 4.1% rewards on USDC, while Crypto.com and Kraken are offering even higher rates, sometimes using APY notation that screams interest. These platforms aren't the issuers of the stablecoins themselves, but they hold customer funds, much like a bank or a brokerage. The problem is, the rewards are often funded through riskier investments, with far fewer guardrails than traditional banking. We saw the FTX disaster as a stark reminder of what happens when customer assets are gambled with. This loophole mirrors the wild growth of money market mutual funds in the 1980s, which eventually contributed to the savings and loan crisis, and later required taxpayer bailouts in 2008 and 2020. Former CFTC Chair Tim Massad has warned that this could lead to similar issues. Now, the crypto community is buzzing, with many investors enjoying these higher rewards, while legitimate banks are crying foul. If a significant portion of the $6 trillion in U.S. bank deposits were to chase these higher rates, it could cripple the banking system, which relies on deposits to make loans. The irony is that banks themselves pioneered the rewards loophole with credit cards to encourage spending over saving. This situation is a five-alarm fire, and experts are urging Congress to close this loophole by extending the anti-interest provision to all users of stablecoins, including exchanges, or for regulators like the CFTC and SEC to step in. The goal should be to make stablecoins the payment instruments they claim to be, fostering a faster, fairer system for everyone without the looming threat of taxpayer bailouts. But what if the crypto world isn't just about loopholes and potential crises? What if it's also about building bridges and fostering understanding? Stay tuned as we uncover a high-profile event where legal minds and digital asset pioneers are charting the future. Emma Channing hosts Landmark Digital Assets Summit. The world of digital assets is rapidly evolving, and understanding its complexities is more crucial than ever. MetaVerse Update was thrilled to host an evening of networking and digital assets in Denver, Colorado, featuring a dynamic discussion led by the esteemed attorney Emma Channing and special guest Amanda Wick, author of The Catalysts and founder of the Association for Women in Cryptocurrency. This wasn't just another industry talk. It was an in-depth exploration of the forces shaping our financial future. Emma Channing, a globally recognized blockchain attorney and technologist who recently joined our banking and financial services team, kicked off the event with her insightful opening remarks. She was joined by Amanda Wick, a leading voice in the crypto space and principal at Insight Consulting, for a stimulating conversation that delved into the burgeoning landscape of digital assets. They tackled the implications of recent legislative developments, including the newly enacted Genius Act and the ongoing discussions around the Clarity and Anti-CBDC Acts currently in the Senate. Attendees walked away with a significantly enhanced understanding of how these legal and technological advancements are poised to reshape financial markets and everyday business operations. Emma Channing brings a wealth of experience to MetaVerse Update, advising a wide range of digital asset, blockchain, and cryptocurrency companies. Her expertise spans token issuers, funds, trading platforms, and banking entities, helping them navigate the intricate domestic and international regulatory environment. She's known for her ability to help clients achieve their goals within the fast-paced world of financial technology. This event provided a unique platform for industry professionals to connect, learn, and gain clarity on the opportunities and challenges within the digital asset space. From high-level legal discussions to market-shaking price action, the crypto world is always delivering the unexpected. Get ready for a deep dive into Bitcoin's incredible surge and what it means for the rest of the market. Bitcoin hits $113,000 as altcoins surge. Get ready to be amazed because the cryptocurrency market is absolutely on fire. Following some surprisingly cool producer price inflation data, Bitcoin has surged, holding strong near a jaw-dropping $113,000, while Ethereum, XRP, and Dogecoin are all extending their impressive gains. This isn't just a small uptick. We're talking about a market that's showing serious momentum. Analysts are pointing to some truly remarkable technical indicators. Stock money lizards are watching Bitcoin closely, seeing patterns that suggest a potential breakout and a powerful rally in the fourth quarter. Matthew Hyland highlighted that Bitcoin's monthly Bollinger Bands are showing the tightest compression in 15 years, a historic signal that often precedes massive price movements. Adding to the bullish sentiment, Michael Van de Poppe noted Bitcoin's successful break above key resistance levels and its 20-day moving average, boosted by the cooler PPI data that's fueling hopes for interest rate cuts. This environment is creating a perfect storm for altcoins to outperform Bitcoin. However, it's not all clear skies. Ted Pillows is sounding a note of caution, pointing out that with a staggering 88% of Bitcoin supply currently in profit, the market is approaching a zone that has historically led to corrections. This means that while the upside potential is huge, smart investors are keeping an eye on risk management. The current market conditions, driven by inflation data and anticipation of rate cuts, are creating a unique dynamic for both Bitcoin and the broader altcoin ecosystem. It's a thrilling time to be watching the markets, with potential for historic moves on the horizon. While Bitcoin and its altcoin companions are capturing headlines with their astronomical gains, a darker trend is emerging that could impact every corner of the digital asset space. Prepare yourself for a stark look at the escalating risks of crypto crime and its chilling real-world consequences. Crypto crime wave, $3 billion stolen, physical threats rise. The digital asset landscape is facing an unprecedented surge in crime, with a shocking $3 billion in digital assets stolen across 119 major hacking events in the first half of 2025 alone. This isn't just about virtual theft. The speed and sophistication of these crimes are drastically shrinking the response window for exchanges, custodians, and even traditional banking partners, extending vulnerabilities directly into mainstream financial institutions. What's truly alarming is how quickly these stolen funds are laundered. In a significant portion of these hacks, the assets were fully laundered before the public even knew a crime had occurred. Laundering can happen in mere minutes, and recovery rates for stolen assets have plummeted to just over 4% due to complex, multi-chain laundering techniques. This highlights a critical need for heightened operational resilience, integrating real-time monitoring, automated compliance workflows, and rapid incident response. These measures are not only crucial for minimizing losses, but also for providing the necessary evidence quality for insurance claims. It's vital that crime insurance policies offer affirmative coverage for digital assets. The scale of these incidents is staggering, with a single $1.5 billion hack of Bybit by the DPRK accounting for a huge chunk of the total funds stolen. The concentration of crypto activity on a few centralized and decentralized exchanges, due to limited regulated custody options, makes them prime targets. Furthermore, smart contract vulnerabilities are a growing threat, potentially leading to unauthorized fund transfers or frozen assets. To combat this, diversifying providers and ensuring compliance with regulatory frameworks like MiCAR is essential. Beyond hacks, ransomware attacks remain a significant concern, extorting hundreds of millions in cryptocurrency. While ransomware payments have seen a decrease, the threat persists. New stablecoin rules in the US and Hong Kong are aiming to boost transparency and combat illicit finance, underscoring the evolving regulatory landscape. Risk mitigation now demands not just technical resilience, but also strict regulatory alignment to ensure insurability and operational continuity. Perhaps most disturbing is the rise in physical threats. 2025 has seen a worrying increase in kidnap and ransom (K&R) incidents targeting senior figures in the cryptocurrency industry across multiple continents. As online trading services bolster their security, malicious actors are increasingly turning to violence and coercion against individual wallet holders. The ease of transferring cryptocurrency, coupled with its appreciating value, makes individuals prime targets for physical extortion. This trend mirrors increased security budgets for tech CEOs and emphasizes the need for multi-layered protection, including personal security and access controls, to counter physical extortion and coercion. Organized crime is deeply embedded in this evolving threat landscape, with scams like pig butchering scaling rapidly. Stolen funds from private key hacks remain the dominant source of illicit inflows, and nation-states are playing an expanding role. As this sophisticated criminal ecosystem grows, risk managers must adapt their frameworks, stay informed about emerging threats, and ensure robust insurance coverage tailored to their specific exposures. Partnering with risk advisors, who understand both digital and physical crime risks, is becoming paramount for future-proofing operational resilience. From the cutting edge of legal strategy to the volatile peaks of market performance and the dark alleys of cybercrime, we've covered a lot of ground today. Don't go anywhere. We're about to wrap it all up with a rapid-fire recap and your chance to win. That's a wrap for today's MetaVerse update. We saw how a loophole in the Genius Act could spark a financial crisis, explored the future of digital assets with Emma Channing and Amanda Wick, witnessed Bitcoin's incredible surge past $113,000, and uncovered the alarming rise in crypto crime and physical threats. Did you find this update valuable? If so, smash that like button, subscribe to the channel for more cutting-edge crypto news, and ring the notification bell so you never miss an episode. Let us know your thoughts on these stories in the comments below, and make sure to follow us on all social media platforms for real-time updates. Thanks for watching, and we'll see you in the next one.